Hey all, Sean Maloney, Digital Business Masters. Welcome to another strategy call. We run these every single week to make sure that people are on the cutting edge. It's not just about speculating and hoping that you might get lucky with the odd thing you buy. It's about running a professional digital business. And if you're going to do that as close to the money supply as we do, then you also need to understand macroeconomics and geopolitics, hence the strategy. So that's the first part of this call. It's the most valuable information in the world. Slowly but surely, people are realizing it, bosses and banks are realizing it, and governments are realizing it. Slowly but surely. We always knew it would happen. We didn't quite know when, but now we are here. So it's a case of making sure that as a grown adult and individual who's got any ambition whatsoever to put themselves in front of purchasing power, not tomorrow, not next week, not next month, but over the next decade, then you need to make sure that you understand this information and act on it. So the action point is part 2. So those of you who are inside the DBM Academy at least a systems subscription level, then you can access part 2 on the recording. You'll find the link below. Get in there and we'll talk you around the factory, the blockchain factory we operate. We'll show you how it works. We'll get you all plugged in and you can start to create a real digital assets business. Very simple. The model works for those who wish to work. Were I to give you any advice at all, that's not what we're here to do. We're a 100% educational platform, and our job is to always seek financial education. Okay, if you want to keep seeking financial advice in the fiat system, and if you don't know what the fiat system is, or you don't know the difference between currency and money, then that's where your problem starts. So make sure that you educate yourself about those differences, and then put yourself on the front foot in applying what you've learned. And for that, you will need support, guaranteed, guaranteed. That's why we set the Academy up in 2020, which is a huge amount of time. It's eons of time in this industry, in the digital assets industry, now coming up to our 6th year. Why we're so passionate? Well, we knew long time ago, and many people in business know this, but as we've decided to focus on the retail, the employee sector, for most of the last decade, what we've found is that, and what we've confirmed, is that not a lot of people who are employed and in the retail environment understand how to protect purchasing power, let alone how to leverage. So what you don't do, or you need to do less and less and less of, and if you're really lucky and you're in your 20s and 30s, you shouldn't even start like this. What you should be doing is maneuvering as much as possible into the era of owning, not saving. Now, of course, you can keep going with the natural things that you've been told to do by parents and teachers and bosses, banks and governments. Okay, fair enough. Have a bank account, have a pension pot, have an insurance, have an annuity, right? Have a job, obviously. Find ways to create income, right? But don't assume under any circumstances that you saving fiat currency is going to put you on the front foot the way it did for your grandparents and parents. Now, savers are losers. Owners are winners. Because what we do, just like any professional business, we obviously get out there and create a difference and create value and earn income. And you can do that with a job, you can do that being self-employed, whichever suits you. But you must convert a proportion of that devaluing fiat currency into accretive assets, ideally that cash flow. That's what part 2 of this call is about. And then you fund your life. You don't buy your life. And if you don't understand the difference, that's where the education comes in. How do we do it? Well, we work on 3 broad pillars. It depends on your sophistication, your experience, your confidence, your ingenuity, your fortitude, your resilience. All sorts of things will depend on how much of this you take on. But the very, very least thing that you need to do as soon as possible, if you've not already started, and if you have started, you have to have the resilience to continue, is to at least dollar cost average the most powerful sound money asset on the planet, as proven over the past decade and a bit, otherwise known as Bitcoin. If you don't understand why that's the case, if you've been influenced by all sorts of people who have opinions but are no better off than you, or worse off than you even in many cases, if you're talking to your typical brother-in-law, then work your own way through. If you want to become an expert at something, you need to apply at least 10,000 hours. That's to become an expert. That's to master something, right? Which is exactly what we've done at Digital Business Masters. That's why we're masters. If you want to understand the basics enough to give you the confidence to get moving and stay moving, at least 1,000 hours. We've never met an ex-Bitcoiner who spent more than 1,000 hours studying Bitcoin in over a decade. So start as you mean to go on, understand what it is you're doing, and then have the ability and confidence to keep going because of nurturing of education and knowledge and awareness, which is what this call is all about. You then understand that on an accretive asset such as Bitcoin, which makes up the mainstay of what is by then a balance sheet, and if you don't understand balance sheets and everything else again, fill skills gap, get educated. By the time you've built up a level of a fundamental asset such as Bitcoin, growing at a CAGR of 68% per year, go and learn what a CAGR is, then quickly you realize, very quickly actually, that you are able to put yourself on the front foot in terms of working with equity. But you don't do that by selling your asset. Never sell your assets, ever. You leverage your assets and you push those into as many places as you can find, which is very much what we're focused on all the time. We have been for years and years and years. And we're getting closer and closer and closer every single week and every single month to understanding more stable, resilient, reliable ways to create something called yield. It's not easy. Why would it be? But the longer time you spend in this space, especially when you're working with such a lot of people connected now through the community, you find these things. And we literally target, as incredible as it sounds, we literally target environments and entities and platforms and projects that we can get towards 10% a month from and stay at 10% a month. We've always done that because that's what's possible over at DeFi. Yeah. Obviously, it's high risk if you're going to be at that level. So you can come down a few notches and get into more normal territory, right? But even in this space, compared to what you're doing with traditional finance in your bank account, where you're barely looking at 0.5% if you're good, a year, by the time you've understood what DeFi is all about, then you realize why we target 10% per month. And then, and only really I suggest if you had some time served experience, you might wish to look and start to entertain the altcoin industry, but you really have to know what you're doing in that. We've learned that the hard way over the years. It's no secret. It takes time for you to build relationships and get over some of the razzmatazz that you will experience as these companies seek crowdfunding and seek ways to fund their startup, right? But when you get involved with something like that, you stay involved. And these projects are able to create equity and yield in the same ecosystem, right? So there's 3 ways of doing it. That's the synopsis. Obviously, there's much more to it than that. Reach out to your DBM coach and we'll put you on the road. That's done best through the subscription system we set up many, many years ago. And it's a very simple process from mindset to wealth. You decide where you're up to. Obviously, most people think they can jump in and they'll go and try and buy success and they'll throw things, degens as they're called. They'll try and throw things at things quicker than they should be doing. They don't understand what they're doing. They're treating it as a lottery ticket. They're speculating. And obviously, they'll go in hard and fast and then figure out that they don't know what they're doing. Right? Not even in the basic sense do they know what they're doing. No security, they don't understand leverage, they don't understand how to manage exchanges, they don't know anything about making sure they've got the numbers organized, cash flow forecasting, balance sheets, nothing. Yet they still think they can go and buy success. Those types of people end up circling back if they've got the resilience and fortitude to be professional. But those with more sense will come through in a stepped process, starting with mindset and skills, and then moving up to application and systems, which is where we go into the factory, we'll talk about in part 2. Then and only then will you get into income, sustainable income, and then with that, you can start to convert into wealth. Yeah, and that's when you're looking at protecting your income. That's the very, very big skill, a totally different kettle of fish. No surprises for guessing the vast majority of people give up down here. Because once they figure out that mindset and skill are required and lots of changes in their lives and everything else, it's just like people who want to get fit, right? They might go to the gym for January, but they give up by the end of the month. This is a financial education gym, and you have to start and get guided and coached into a place whereby you can finish the job, right? It's up to you what you do with it. To accelerate that along, we have the Wealth Builder series. This is a nice, neat way of doing everything in your own time. It's all predominantly run by AI these days, and you've got lots of tools and resources and step over 12 months for you to get it done in a nice, simple 12-month process. Again, we'll see. But the idea is that people need to finish the whole thing and go through the process, and most importantly, apply every month what it is they've learned, right? Then and only then are you going to be able to move through the gears to get to the points where we want to get to, which is month 6 onwards, where you're really getting into developing your own blockchain factory. Again, we'll talk about that in part 2. Now, the backbone of this particular session every week is all about updating on macro and updating on geopolitics. As I said at the top, very important to understand if you are going to work this close to the center of the money supply, you better understand what it is you're getting involved with. You better understand the vigors and the aggressive nature of how things can shift and move. And if you understand that and are prepared for that, then you've got a better chance of working through it, just like we were doing as we got started in this early last decade, and we didn't know anything. We didn't know what we were doing. We just understood after 2008, something had to change. So we made the change in our own personal positions, and we were able to sustain that change all the way through these ups and downs that you look back on now and think, oh, that was cute. Yeah, not at the time it wasn't. Just where we might see drops from 126,000 to 109,000, in recent times, we don't even blink. We don't even blink. Because when that was going on back in 2015, 16, 17, and then again 2020 over to 2022 with huge drops, we knew already at that point that we were on the right foot because of the nature of why this is happening. Okay? Now in 2025, of course you still get some relative volatility, but it's much more stable than it's ever been because now we've gone across the Rubicon. We've moved from where we were, and those people who've been able to be resilient in the DBM Academy all the way through this era, right, are absolutely bulletproof because you've got absolute understanding of what you're doing and you understand what it takes. Now we're in the world of institutional, corporation, regulatory, investor, government eras. And as soon as that sophistication comes into any marketplace, then you've got the tailwinds. And that's what we've been experiencing, particularly over this past 12 months, which is why we've got 3, maybe even 4 actually, consecutive all-time highs in Bitcoin just in this past period of time. And we're fully anticipating heading way up towards 200,000 plus over this next cycle. Now, if you've been accumulating Bitcoin in that way, obviously the longer the better, but even if you've just been doing it for the past couple of years, that's the accretion I'm talking about, which you can then convert through to equity and start to use on your balance sheet through some very clever maneuvers that we have that we'll talk about in part 2. And then you're able to then drive your balance sheet into a P&L and create cash flow and reallocate and push that back round again. And then it becomes a flywheel. It's just a flywheel that's connected not just to what you do in your business or somebody might be doing local to you in their business, but it's interconnected with millions of people and millions of businesses all over the world who are now putting Bitcoin on their balance sheets. Therefore, every single person in that super system gets a net benefit. You can't do that with any other asset class. This is why it's so important that we help spread the word and get the word out there, okay? 68% CAGR, obviously we don't budget on that into the future, right? But you should know that, and that's part of the education. But even if you go in half that, you're beating any other asset class on the planet. Yeah, overall, this is the key. Now, the nuts and bolts, lots and lots and lots going on. As I say every week, it's getting more and more difficult to squeeze this into 3 slides, but I'll give it a go. You've got your macro updates and you've got your geopolitical updates. All right, so lots going on. Fed Reserve hosted a conference last week based on payments innovations. Welcome to the party. Yeah, they're late, but they met some of the biggest names in the business: Chainlink, Circle, Coinbase, etc. And now they're looking forward to bringing payment rail access into their gift. They can't beat it now they've joined it. They tried and kicked and screamed and fought and called us all things under the sun for the last decade, these central bankers. And now they've capitulated. They've bent the knee. Yeah, and it's a pleasure to behold because you've front-run them. And if you've been holding Bitcoin for any length of time, you've beat the system. So the whole idea now is to move into this payment accounts to give crypto and fintech companies direct access to its payment network. Think about that. Direct access to the Federal Reserve's payment network. Now that becomes even more interesting when I go into the geopolitics in a minute, based on what's happening at the moment, but we'll see. Fed Governor Chris Waller, again, bent the knee. Christopher Waller wasn't giving too much of a bloody nose over the past few years. He's one of the ones that sort of sat quiet and did the clever thing, which is observe and absorb. But now, based on his speech, hope you heard it last week, he's very clear that crypto are part of the fabric of the financial system. Boosh, yeah? That's where we're at. That has been a seismic shift in just 12 months, probably less than. Part of that seismic shift has been BlackRock, who just last week launched their very popular ETF, ETP product range that launched in America, the biggest ever ETF that BlackRock ever created. That came to the UK just like last week because, again, the UK has some level of independence away from the Eurozone and it's able to fast track its slipstreaming of American business dominance, which is happening in more ways than one right now. XRP backed Evernorth, plans a NASDAQ listing to raise over $1 billion, aiming to be the largest publicly trading XRP treasury in the world, as per Reuters. The XRP army, the XRP bros, are delighted about that. Obviously, it's a very, very certain type of group that follow XRP. It's no problem. We have XRP on our books as well, but they do get a bit overexcited. It's got to be said. Bitwise launched the Bitcoin ETP into the UK as well last week, so this isn't an accident. Yeah, it's like the dancing man. It just gets moving. You'll find a lot of that going on with the stable coins. We'll talk about that in a minute. Russia's Ministry of Defense just said that Bitcoin can be used in foreign trade. Now, that's massive, and that's no coincidence either. The timing of what's going on with regards to the shift from the military industrial complex to the financial industrial complex, which is having the effect of dampening down wars, which has got to be a good thing, but it's also having the effect of weaponizing the finance systems. Russia are acutely aware of that, so they've now opened up to say, well, if the dollar's going to keep kicking us around with sanctions, then we'll just go off rail and go into Bitcoin. So now they're going to start selling, their particularly oil reserves into markets through Bitcoin, which has a net effect on our balance sheet just as much as everybody else who owns Bitcoin. So the next global reserve asset is absolute, it's fixed. Russian Ministry of Central Banks have agreed to legalize crypto payments for international transactions as per Ivestia, just as the West applies tariffs on Russian private companies. Yeah, this is what it means to be in front of. This is what it means to be aware of the macroeconomics and get a feel for what's going on. You can never say, of course, it's very dynamic and it shifts around. A lot of the politicians don't know what they're going to do next. But you can look at the fundamentals. That's all it's ever been over the past decade when it comes to finding the most powerful sound money that humans have ever invented. And that get wrapped in what are called stable coins. So just this weekend, actually, it's gone big guns because now we've got the Genius Act expected to be put through in the US very, very quickly. The Europeans are catching up. They're going to have to. The UK, other parts of the world, including Japan. The US is in Japan this week. So now, all of a sudden, the stablecoin revolution is here, bolstered by the Genius Act, Western Union, Zelle, Clearbank, all these big, big companies now facilitating Bitcoin transactions. Yeah, for a long time, we pushed against Western Union because they are a complete rip-off, right? And they're still going to rip people off. They're just going to go through stablecoins instead. The fact of the matter is they've no choice because as every man, woman and child on the planet with access to the internet and a little bit of ambition to get educated, they don't need these companies. So they've no choice but to move quickly. But we all know the average person won't trust themselves to do it. They won't feel worthy. They're not educated, confident enough to do all the things they should be doing as a sovereign individual. So they will use these companies and therefore carry on to be ripped off. Japan launched their yen-backed stablecoin, just announced yesterday, right? That's not a coincidence either, when you consider now that the US, through the Genius Act and other things, are making big moves so that US treasuries can be compensated for their lack of demand through nation states. They're going to start selling treasuries through stablecoins, which is a big part of what Tether already does, individual to individual. So they're going to try and keep the fiat, their version of the fiat system on the dollar standard. They're going to try and keep it alive just a bit longer. But as we'll talk about the geopolitics, yeah, it's going to be very interesting how that plays out. Whichever way it plays out, it has a net positive effect on Bitcoin. SoFi, a massive bank in the US, obviously, to launch Bitcoin remittance services using the Lightning Network. So these banks are even further forward. They're moving into Lightning, right? There's a big debate on, always in Bitcoin, about its purpose. For me, it's always been a dual purpose. It's classified as a commodity and has been for a few years. Its ability to be able to be an interconnected store of value is proven. Its increased demand over a very fixed and finite supply is proven. The next step is the transactional benefits of what it represents. And Lightning Network is the rail for that. And there's lots of OGs and lots of, big Bitcoin influencers, Jack Dorsey, etc., who absolutely insist that Bitcoin must have a part to play in transactional operations. And banks like SoFi are watching that and have already figured it out. Other banks will soon too. And again, you'll just find Bitcoin becomes more and more of a mainstay to replace the current system, to go back to where we were in terms of having a standard to the monetary system, which used to be gold, but hasn't been for the last 54 years. And Bitcoin is now going to take its place in providing that solution, but in a much more effective and efficient way. Coinbase CEO knows that more than most, reveals that their new operation base will soon enable private stablecoin transactions. They'll use Ironfish's ZK proofs to mask amounts and addresses and read-only access for authorities. So you're looking at sort of private, what do they call it? It's keeping things private is what they're trying to do there. Yeah, we've used USDT for approaching a decade, and we've operated often in DBM using stable coins for most of that decade. We've never had any concerns over privacy or anything like that. It's a legitimate business that does what it does. But if that's what they want to apply and that's what people want in the market, they're going to bring it to the market, aren't they? American Express just partnered with Coinbase to launch 4% Bitcoin backed on all purchases. Okay, Coinbase has over 100 million users. We've known about this for a while. This is available only in the US as we currently understand it, but we're keeping an eye on it because this is going to completely revolutionize the way the credit system works. And Coinbase know it. They're doing a lot at the moment in government level, and they are going to get their way eventually. They've just got to give it over gently when you've got the Visas and the MasterCards who have so much hegemony and have ripped people off for so many years. They're now giving a different model that's obviously better for the common person from Coinbase, so that will take over the show. Or more to the point, MasterCard and Visa will have no choice but to capitulate. But the fact they haven't already done that is the question. Do you trust them? You decide. People should vote with their feet. The great capitulation, as we call it there, working both ways. There's a podcast on this from last week. $6 trillion Fidelity says Bitcoin and crypto are now central to their client advisor conversations. I mean, the audacity of the Fidelity is just beyond words, but they're now willing to talk to their clients about it, which is crazy. Their clients should have already walked by now if they had any sense, but obviously the average person isn't going to do what you're doing and getting into the bones of how to do this as a sovereign individual. Wall Street can't ignore Bitcoin. We know that. We've known that a while. Since July 25, Bitcoin whales have executed a staggering $3 billion in tax-free conversions, okay, moving their self-custody coins into BlackRock IBIT ETF. Now, again, I say every week and I'll keep saying it. There's no problem if you as a person wish to use these new facilities coming out from custodian establishments, everything else. And it's not for me to judge. It's not for me to guide in any way, shape or form. You're a grown adult, but be careful, right? Self-custody, cold wallets, everything else is the absolute backstop, sacrosanct way of making sure nobody, absolutely nobody, can touch your future. But we fully appreciate using proportions of your asset wealth, particularly Bitcoin, in some of these facilities, including IBITs, ETFs and everything else, it's okay. But do not, under any circumstances, in our opinion, give everything over to these established institutions. You're finding it happen a lot. You've seen there a lot of the OG money has already gone over this past just few months, right? And those OGs will have a reason for doing that. They'll have a reason for selling their Bitcoin. When you've got 100,000 Bitcoin that you've accrued on an average of $5,000, then fair dues, yeah? Go and live your life. But the point is that if you're getting rolling in this, you're much better off learning how to do self-sovereignty and security, which is part of what we do in module 3 of the Wealth Builder series, by the way. So we'll get started on that. Standard Chartered says sell gold to buy Bitcoin. Okay, rotations do happen. I mean, we're keeping an eye on it. It's only less than a week old since we saw gold start to dip after some major pumps. We're big gold fans. We've always been gold fans. We understand gold's place and purpose in a balance sheet, a sovereign balance sheet, but it's just not got the muscle and the power and the flexibility of something like Bitcoin. So it sits there as a reserve more than it does as a operational asset. But the rotation is interesting to watch because they are normal, and we call them the doomers, as we come across them. It's the baby boomers. They tend to only know what they know, right? That's all they've ever known, so that's what they do. The next round's coming now, where you look at rotation. So once that gold price has hit maturity, what tends to happen is it does it in smaller ways, but I think this one's going to be quite a big one over the years. As gold starts to come down again off all-time highs, Bitcoin goes gangbusters, which is why we're fully confident we're going to be approaching 200K over this next few months. Revolut and Bitcoin.com get MiCA approval from the EU. Nothing stops this train. I mentioned that before. The EU, despite the grandmas who run the show in the EU, they're having to capitulate, right? Because they're just getting more and more pressure from private entrepreneurial businesses going through the system. MiCA's fair enough. Yeah, it is what it is. It has to be, you have to have laws and regulations. You have to protect people. We get all that. But they've been so slow, like so slow. It takes eons to get approved, or it did until the Americans came in. And now the Americans are moving at light speed. The Europeans have no choice, which just shows the lack of sophistication, the complicity, the ignorance. I don't know what it is when it comes to government, but they're just not good enough. The quality of the governments aren't good enough. But luckily, the private sectors, the entrepreneurs of this world, we push and push and push and push until we get what we want, right? That's how it should be. And that's what's happening right now with MiCA. Bank of America says the entire US banking industry will embrace crypto payments. No prizes for that statement. Bank of America, welcome to the party. $4 trillion giant JP Morgan announced that they'll allow Bitcoin as collateral. That came very late last week. Again, JP Morgan, Bank of America, Fidelity, even BlackRock. They're just dinosaurs, right? But they've got no choice. Now, of course, now they'll start to try and take over everything. That's why self-sovereignty is so important. But it doesn't matter if you're an established owner or you're still working through. You've got plenty of time to grow your Bitcoin position. Don't worry about that. 2030 is our next target. So the whole idea here is, as these big institutions capitulate, it just adds more fuel to our vindication. Geopolitics. Now, lots going on here. We're learning on our feet as well right now, but we think we've spotted what is these next moves. These next moves, as I've already touched on, as the world shifts on its axis and starts to move away from what's been around since the Second World War with regards to military-industrial complex. It looks like now we're moving very much into an era of financial-industrial complex, mainly driven through the GCC, to start with, Saudi, etc., all down there, and it's moving now across to China and through Japan at the moment, and then eventually it'll end up in Russia. So it's all being triggered by the US, all trying to make sure that they stay in control as they would like, obviously, to be. But the way they're doing it is quite interesting. So just today, 27th of October, go to the podcast in the Academy and you'll have a look at the shift from MIC to FIC and why it's happening. Quite a detailed podcast detailing that. the bottom line is, if you own Bitcoin, you win either way, right? So the US needs to eradicate its debt. They're going to do that through the treasury system, obviously. There's no particular state institutional buyers for those treasuries anymore, the way they were, because of the rates. But what they are going to do is flip to stable coins, and then ordinary people are going to be able to go in and indirectly acquire US treasuries to bolster the system. At the same time, there's an expectation that the US may well reset their 38 trillion of debt now, as of last week, and growing at $1 trillion. I think the number is $1 trillion a quarter. Top of my head, it might be quicker than that, but something crazy like that. They've got to get rid of that debt, right? So the other side of it is the BRICS and all these other nations. They're moving off the dollar standard, as you saw there from Russia. Everybody, the BRICS nations will follow Russia now, and now they're going to use Bitcoin rails. They're going to use Bitcoin transactions, so that they're eradicated from the dollar. Now the US can't have that either. So what they're doing with the tariffs is they're going to go in and set, especially the rare earths, they're going to set all the deals up they need to set up. They did that on Saturday, actually, with $180 billion of rare earth deals with Australia, Cambodia, and Thailand, all in the auspices of also solving wars while they're at it. And now they've managed to figure out enough of a supply chain to themselves for rare earth, so they don't have to be totally reliant on China, right? So therefore, they'll go into China now. We're expecting this to happen on Friday, which will be massive for Bitcoin, so that there will be a deal struck where China will need the demand of the US in its current form more than the US needs the rare earths of China. So you'll find a balance go on, and then that will reflect onto Russia, and we fully anticipate that then to put an end, first of all, to the war, and then we can start to get back to business, especially with some of the projects we're involved with. So there's a whole array of things on the macro geopolitical level going on there, and it's all fed with these points inside this slide. So go to that podcast, enjoy it, and see what you think. It's just an interesting theory that we think we've figured out. But most importantly, down on the ground, with midterms coming up and everything else, we are getting wind that we may start to see some stimulus checks going into the ordinary people of America. Now, that's obviously being funded by tariffs as well. But what it's going to do, it's going to kick on the new model, especially as they're looking to onshore manufacturing and employment back to their own people, as opposed to having exported dollars and inflation for the past 40, 50 years. They're going to start bringing some of that manufacturing back. Now, they can't do that straight away. And obviously, they want to keep the people relatively sweet. So they are going to maybe put in some of these stimulus Trump checks, as they call, like they did in COVID. If you were around in COVID and you observe what went on and you just look at the charts, you'll see a big chunk of those stimmy checks went into Bitcoin. People aren't as daft as they look. So the whole idea is keeping an eye on that and just knowing you've got these short-term bursts of energy coming into your balance sheet. President Trump's crypto czar met with legislators last week, 21st of October, to help advance crypto market structure bill. That goes hand in glove with the Genius Act that we've already spoken about. So the market structure will again bolster the ability for more of these institutions, more of these big players, more companies, more treasury companies, Bitcoin treasury companies, just get involved with what we've known about for a long time. Joe Powell, this is again another key part of what's going on this week. The ending of QT. Now, if you don't know what QT is, it's the opposite of QE, yeah? Now, if you've been around, certainly since 2009, when the first QE started to come into the economy, you'll know the damage that it's done. They'll say it had to be done, but we've always disputed that. They should have just let things fail. They should have brought better systems in themselves. Was it ever going to come top down from governments? Absolutely not. Thankfully, something came around from bottom up. We watched it, we spotted it, we've accrued it, we've got it, we own it. That's Bitcoin. The whole thing is shifted on its axis. And now it just gives us even more ability to observe, which is all we do these days. We just observe the inevitability of the Fed and central banks on a monetary level and the governments on a fiscal level continuing just to move things around as if they know what they're doing. The average person, the average media outlet, the average editor just reports that verbatim. It doesn't even have the ability to argue and discuss and get into any constructive debate about what they should be doing. Right, and that's got to be questioned as well. But all the Fed's going to be doing now, is it will start, we expect actually on Wednesday, is that they're just going to start to switch away from QT back to QE. So their balance sheet now is completely dry. So when they were quantitative tightening, they had the funds, they were buying up assets to keep the banks moving no matter what they got up to. That's now gone. It's finished until the next time. The QE is then printing currency, and we all know what happens to assets when federal banks and central banks print currency. So again, just another front foot maneuver. Shouldn't be that way. People say, oh, well, it's all right for you, or does that give your company an absolute net benefit every time that they print currency? Yes, it does. Now, does that make us feel good? Not really. Because when they do print currency, it also has the effect of driving prices into places where people don't understand. They don't realize hidden inflation, right? But what do? I mean, all we can do is say, well, look, hello, if you were doing what you need to do, which is stop trying to be a saver and be an owner, then you could be a beneficiary of this shenanigans rather than going through another year of austerity or whatever the next crisis is going to be called. So put yourselves on the front foot, which is what the DB Academy is all about. I don't know what more to say. White House crypto, David Sachs is a privateer. He's come through very strong. Follow him on the X if you can. He's very, very interesting. So his bipartisan crypto market structure legislation could pass this year. So that's the third leg of the crypto market and the Genius Act, and it's all looking like it's taking shape. All right, now doesn't mean it's going to be made easy for the common person. You've got to get under the hood. You've got to know that these people are going to do things for all sorts of vested interests, and they're going to back scratch the boys, right? But the whole idea is, as long as you know that, you can put yourself on the front foot and take advantage of tailwinds. Money market funds just hit an all-time high, 7.4 trillion, okay, which is absolutely massive again. That wouldn't have meant much to people, even people who've so-called got pension funds. Does the average person have any clue what's in their pension fund, let alone what it's going to be worth in purchasing power in 10, 15, 20 years? Probably not. 99% chance the Fed cuts rates in 6 days. We're probably looking at a 25 basis points. Some are talking about 50 basis points, but it doesn't really matter to us. What we want with Bitcoin is a steady growth. Right? And if they do 25 this month, 25 next month, we're expecting another couple in 2026. Good for us. Rate cuts will push Treasury holders to seek more risk. That's what we were saying before, which is why they're moving to stable coins, driving liquidity into Bitcoin and other assets. Liquidity is now becoming again. Right? That's how simple this is when you observe what's going on rather than be led by the nose, uninformed. Donald Trump selects Bitcoin and crypto supporter Michael Selig into the CFTC as the CFTC chair, I should say. So that's a big move. Obviously, we can see what's going on there. I think the Trump family under their crypto business bought something like 1,400 Bitcoin just this last day. So we obviously know now. It's not Trump himself, it's his kids and the people around him, obviously. It doesn't really matter to us. It's all now very much tailwinds. Genius Act compliant stablecoin will be live soon. Okay, so that's what I'm talking about with regards to what's happening behind the scenes with these stablecoins. It's now getting government level backing because they need it through the Treasury system. Custodia Bank and Vantage have launched a live network for tokenized deposits. US banks now to switch between traditional deposits and the full Genius Act compliant stablecoins. Right? What's not to get? For a long time, you'll know we're working with the trifecta. Yeah? Own USDT, maneuver that into accretive assets, drive that into cash flow, preferably through collateralization. Own as much USDT as you can at any point in time, right? We didn't know this was going to come so quickly, but we always understood the power of the US dollar. So the whole idea is now that's just going to become even easier for us. Right? And if they do get their way in maintaining the hegemony of the dollar-based fiat system for just a little bit longer, right? And a little bit could be 5 years, could be 10 years, it could be 20 years. So in our particular world, that's going to carry on. It's just got to be assumed that's going to carry on, right? The dollar is going to try and hold the line, which is what this FIC is all about. Go and listen to the podcast and you'll figure out then the power of having USDT on your balance sheet. Okay, so this week's a big week. Fed rates, as we've discussed, earnings reports from Amazon, Apple, etc. on Thursday, tariff meetings on Thursday and Friday. The Fed rates is on Wednesday, by the way, and this big shift that's underway right in front of our eyes now, happening right now as we speak in Japan, and it's just about to happen on Wednesday when the Chinese and the US sign off. Right, they've already been there this weekend. That's where we're getting this information from. Scott Bessent, etc. have already been there. We can see what they've done. Now it's a case of having it rubber stamped. The minute that gets rubber stamped, it's just another tailwind behind what we've always known, that people need to move to sound money. Now, that's a lot to take in. Of course it is. It's not an accident. The whole thing is a lot to take in. That's why we do these things regularly. That's why we have an academy. That's why we have workspaces. That's why we have workshops. That's why we have the podcasts. That's why we have the blogs. That's why we have the infrastructure. Okay? So make it your business to put yourself on the front foot. Invest in yourself before anything else. Get yourself educated. Fill those skills gaps. Put yourself where you need to be in confidence. Work together with people who've got what you want and can prove it. Good luck. And if you want to know where we go now into the engine room, actually looking at the factory itself and how all these things connect, that's what the link in the chat is, and you'll be able to get over there as a system subscriber. We'll see you over there. Thanks a lot.